Hello everyone. Today I will introduce to you the key algorithmic price signatures. If you want to know how you can use this in your trading, please join the Nasdaq Masterclass of the Money Booster Academy. The link of the free Discord server is in the description down below. What can we do with the key algorithmic price signatures? These price signatures are a easy way to track the order flow. It's also easily to predict the next high or low, and the price signatures are very strong combined with the PDRA. Keep in mind that the levels cannot be used on its own. You need to have your confirmation. So you need either to confirm it with liquidity levels or with a specific PDRA. Now, let us have a look at the schematic down below. I've annotated the 18,000 level and the 19,000 level. As you can see here, we break the 18,000 level, we form a higher low, higher high, which means we do not have the intention to break this level and we can keep on our eyes up here. This means that if we enter the 18,000 price range, we can anticipate that the next following big algorithmic price signature that we are going to break is 19,000. So the market will move from start to finish in a bullish structure. You have also, if it's a bearish structure, this will be your start point and this will be your finishing point. But let us now have a look at the bullish structure. You see here, we are moving freely inside of this range. Keep in mind that these highs and lows that I have annotated are not random. These highs and lows are on specific price levels. I have just introduced you to the 1000 level. So the levels move with steps of 1000. So 18,000 to 19,000, 19,000 to 20,000, 20,000 to 21,000, and so it goes on. Let us now discuss the 100 price levels. They are also very important, just as the 1000 levels, but with the 100 levels you can make plays within this big range. This is the exact same schematic as I showed you earlier. I also told you that these highs and lows are not random. As you can see here, they form on specific price levels. Even these lows that are between two levels are on specific price levels. But this will be discussed in the Nasdaq Masterclass of the Money Booster Academy. Link in the description down below. So if you have the right confirmations, you can short here and long here. You can short on each level or long on each level if you have the right confirmations. Even in between these two ranges, there are key price signatures that you can short or long to the other side. Inside these two price levels, there's one 100 level that's very important to monitor to see if we move to this price point. I'm not going to tell you that, you need to investigate this for yourself. So think good. What is it about ranges? What level is important to monitor to see that we will move to the other side? Now, let us have a look at a chart example. As you can see here, we try to enter the 23,000 price range, but we failed because we rejected this level. We went down, rejected, gained, but rejected again this level, went down, found support, broke through until the price had enough strength to gain this level and go to the next level, but unfortunately we rejected again and moved to the 23,000 level. As you can see here, price is acting as support on this level, which meaning, okay, we have respected the 33,000 level and we can have our eyes up here at the 34,000 level. You might be thinking, oh, this is not very clean. We are not respecting this perfectly. That doesn't matter. It does not have to be perfectly. It can purge it, take out liquidity, and move higher. It does not have to be like this. It also can be like this, where we don't touch this. These are just POIs we need to keep our eyes on. And as I have mentioned earlier, here would have been a level on the lower time frames where you could have entered your long. If you are going to take a look at the price movements inside this range, you can see in each movement we respect the levels to continue the upwards movement until we reach a certain point and we slam lower. In this move lower you can also see, hey, we moved lower. But what did we do? We broke this level, retested it, moved lower, retested it, moved lower, retested it, until we reached key liquidity points laying around here. What did you see here? We lost the 23,000 level. Is this bad? No, because you can't just trade with the price levels. You need to combine things. Now we have combined liquidity with price levels. Within this liquidity graph, there are key price levels where the price has bounced from to continue the move higher. We also see this price level. This is the current all-time high of the Nasdaq that formed around the 24,000 price level. But we failed to find support here and slammed lower, almost to the 23,000 price level. We found support here and are now trying to go higher again to the 24,000 level. As soon as we break the 24,000 level, we can expect, and we find support, we can expect a movement to the 25,000 level. So, as soon as we break this, find support, confirm that we are in a bullish market, we can move to the 25,000 level. To summarize this lecture, we have to discuss the 1000 levels and we have discussed the 100 levels. The levels that are laying between the 1000 levels and the 100 levels will be discussed in the Nasdaq Masterclass. There will also be discussed the most important 100 level to see if we move to the next big 1000 level. Just keep in mind that if you want to trade with these levels, that it's a great way to track the order flow. You can easily predict the next high or low, and they are very strong combined with the PDRA. But you need to keep in mind and listen carefully that the levels cannot be used on its own. You need to have your confirmations if you want to trade with these levels. These levels should act as your POI, which you can use when you have your right confirmations. Thank you for watching and I hope to see you soon on the next video.